U.S. Treasuries took that.
Welcome to the Bootstraps Bootcamp, Rebels. I'm going to go over what stocks actually are, the rewards, the risks, and how you can actually get started. So when you buy a stock of a company, you're effectively buying an ownership share of that company. You're investing in that company to succeed over the long term. And you're also investing in that company's profits, in all their employees, in their vision and their values, everything that makes up their business. That's why you care about how they're going to perform over the long term. So now, what are the rewards for investing? Why would anybody invest? Well, it's unlimited upside of your money. These companies, the biggest companies in the world, have thousands of employees working for them. And each of those employees, their literal job is to make sure that the bottom line of the company improves and that they're making money. This is why you want to invest in these companies. And I'm talking you can 2x your money, you can 3x your money, and you can even 10x your money over a period of time. It could be a year, it could be 10 years. But over your lifetime, this is how you're gonna actually make most of your wealth. Now you guys don't even have to be insanely smart. You can give your money to the smartest business leaders in the world and let them make money for you. So now, we know the rewards. What are the risks of investing in the stock market? Now, a major reason people don't want to enter the stock market, or they're even scared to, is because they think they can lose all their money in the stock market. That is simply not true. That is not how the stock market works. I told you unlimited upside. Well, I would put your risk at 20% downside. You could lose 20% of your initial investment over the short term. Now, of course, if you're buying stocks nobody's ever heard of, or you're trading options that expire worthless, then you can lose a lot of money. Of course, over the short term, there can be volatility in a stock, but stocks generally only go up. Look at any graph of any stock, and maybe you only find a handful that's not true for it. So you've got to know what you're buying. And if you don't know where to begin, no, you've come to the right place. So how can you actually get started? First, you need to set up a brokerage account. I would recommend Robinhood because it's very simple on your phone. It's an app. You can also go online to TD Ameritrade, Charles Schwab, Fidelity. There's a bunch of brokerages that you can use. I'll pop a few links below. But basically, they all do the same thing. It allows you to buy and sell stocks. By the way, opening any brokerage account should only take about 20 minutes. Funding that account from your other bank accounts might take a day to a week. As soon as your brokerage account opens and it's funded, what stocks do you buy? Well, I'll go over my entire portfolio in a different video, but the best and the ultimate beginner stock is the greatest company in the world. It's Apple. I want you to buy shares of Apple stock. Now, if you haven't heard of Apple, it's one of the most innovative companies in the world. It actually has one of the best balance sheets out of all the other companies in the world, and it has the largest cash reserves to actually buy other companies and things like that. So it's going to continue innovating years and decades out into the future. Actually, you want to look at Apple's performance in the past to know what I'm talking about, of how good of a company this is. So over the past 5 years, Apple has gone up over 500%. Last year in 2020, Apple shares gained 70%. Apple is the gold standard for stocks, and it will be the benchmark that I compare my portfolio to. Because if I can't beat Apple's return, I might as well just invest all my money into Apple. And even if you don't use Apple's products or you don't like them, you've got to at the very least see the business opportunity and the chance to make money. Now, you can throw all your money into Apple, or you can just throw a little bit just to start learning. It's that simple. Especially in the beginning, you guys do not need to diversify. You only need to diversify risk. Purchasing shares of Apple is not risky. We will, of course, talk about risk at another time because you do need to take risks to make money, and that's a big part of the rebel mindset. Until next time, stay frosty, rebels.